In the world of high finance, few names command as much curiosity or controversy as Michael Burry, the hedge fund manager immortalized in The Big Short for predicting and profiting from the 2008 financial crash. This week, Burry made headlines once again, but not for another market bet. Instead, a filing with the U.S. Securities and Exchange Commission revealed that his hedge fund, Scion Asset Management, has been officially deregistered, signaling that Burry may be walking away from the hedge fund world. Again, the fund, which managed around $154 million as of March, no longer meets the $100 million registration threshold, effectively closing its doors to investors. Though Burry himself hasn't publicly commented in detail, a viral social media post, which appeared to include a letter from him, hinted at deeper reasons. In it, he reportedly told investors he was returning capital, explaining that his estimation of value in securities is not now, and has not been for some time, in sync with the markets. The message echoed Burry's long-standing criticism of inflated valuations and speculative euphoria, particularly around AI-themed stocks, which he has frequently described as unsustainable. The man, once celebrated for seeing what no one else did, appears to be bowing out of a market he no longer recognizes. If confirmed, Burry's decision marks the second time he has shuttered a fund, the first being Scion Capital, which he closed in 2008 after famously shorting the housing market. His return in 2013 with Scion Asset Management was seen as a comeback, a chance for one of Wall Street's most contrarian thinkers to reassert his analytical genius. But over the past 2 years, Burry's tone has shifted from cautious to openly disillusioned. His January 2023 tweet that simply read "sell" went viral, a two-word warning that seemed to capture his broader skepticism about an overvalued market. Ironically, since that post, the S&P 500 has gained about 75%, a rally driven largely by investor enthusiasm around artificial intelligence. For many, that performance underscored how even the most famous contrarian can misread the timing of modern market momentum. Yet for Burry, timing has never been about short-term wins. It's been about truth. His public statements, often cryptic but pointed, suggest a growing frustration with what he sees as irrational exuberance, particularly in tech stocks like Palantir Technologies, which he recently criticized as wildly overvalued. When reports exaggerated the scale of his put options on Palantir, misstating $9.2 million as $912 million, Burry was quick to correct the record, calling out media sensationalism in the process. So why is one of the most celebrated hedge fund managers of his generation stepping back now? Those who have followed Burry's career know that his decisions often go deeper than money. The deregistration of Scion Asset Management might signal more than just strategic repositioning. It may reflect philosophical exhaustion with a system he believes has lost its tether to reality. Burry has long warned that markets reward hype over fundamentals and sentiment over reason. His recent remarks about Oracle, Meta, and other AI-driven giants as wildly overvalued echo a man unwilling to conform to the market's current euphoria. In an age dominated by momentum trading, influencer-driven investment culture, and algorithmic speculation, Burry's approach, grounded in old-school value analysis, feels increasingly at odds with Wall Street's direction. "My estimation of value is not in sync with the markets," he wrote, a line that might as well serve as his final thesis on the modern financial world. For someone who built his reputation on seeing through illusions, the idea of participating in what he views as a collective delusion may simply have become untenable. What makes this development even more compelling is Burry's own cryptic hint that he's moving on to much better things. The phrase appeared in one of his recent social media posts, dated November 25th, where he suggested a personal or professional shift, though without elaboration. This ambiguity has fueled widespread speculation. Is Burry planning to launch a new venture, pivot toward private investments, or simply retire from the spotlight altogether? His silence only adds to the mystique. In another post, Burry shared an image of actor Christian Bale, who portrayed him in The Big Short, lying on the floor with the caption, "It worked out, it will work out." For fans of Burry's enigmatic online persona, This was vintage him, simultaneously reflective and defiant. The message seemed to suggest confidence that, whether the market agrees with him or not, time will ultimately vindicate his perspective, as it did in 2008. But unlike that historic moment, this time there's no grand crash or apocalyptic bet to anchor his move. Instead, it feels like a quiet withdrawal, a thinker choosing peace over participation in a game he no longer wishes to play. For many observers, Burry's exit from the hedge fund world feels symbolic, a sign of the widening gap between traditional value investing and the speculative frenzy that dominates today's markets. His decision to deregister Cyan Asset Management could be seen as a protest against the system itself. Over the past few years, central bank policies, social media hype, and retail trading platforms have blurred the line between strategy and gambling. To someone like Burry, who built his reputation on meticulous analysis and long-term vision, that shift represents a fundamental distortion of capitalism. Analysts note that Burry has often warned of bubbles forming in sectors that others celebrate, from electric vehicles to artificial intelligence. He has argued that investors are no longer pricing companies based on earnings or innovation, but on collective emotion, the thrill of chasing the next big thing. By walking away now, Burry may be making his boldest statement yet, that sometimes the only way to win is to stop playing. This move has inevitably reignited debate about whether Burry's caution is foresight or fatigue. Supporters point to his unmatched record in identifying risk before others, from the housing collapse to early warnings about unsustainable valuations. Critics, however, argue that his skepticism has cost him returns in a market driven by technological optimism and liquidity. Yet both camps agree that Burry remains one of the few figures in finance who refuses to conform. His withdrawal could inspire a new wave of introspection across the investment world. Are markets still anchored in rational value, or are they floating on speculation disguised as progress? His story also underscores a broader truth about the psychological toll of contrarianism. Being right too early, as Burry often is, can feel indistinguishable from being wrong. And perhaps after decades of battling market mania, he's simply choosing silence over shouting into the noise. There's also a personal dimension to this chapter. Those who have followed Burry's journey know he has long struggled with the public's fascination with his persona, the reluctant celebrity born from The Big Short. While many see him as a genius who outsmarted Wall Street, Burry himself has always appeared uneasy with fame, preferring spreadsheets to spotlights. His decision to close Cyan may therefore represent a retreat toward a quieter, more deliberate life. Some speculate he could shift his focus to philanthropy, private research, or writing. Others believe he's preparing for a new kind of investment structure, one that doesn't require public disclosure or regulatory oversight. Whatever the case, Burry's final act as a registered fund manager reaffirms the traits that made him legendary: independence, discipline, and the courage to walk away when conviction outweighs convention. His departure leaves a void and a challenge for the next generation of investors to think critically rather than follow trends. As the financial world digests Burry's move, the message feels clear. In an era obsessed with short-term gain, he remains a long-term thinker. His legacy isn't just about predicting crises, it's about questioning assumptions. Whether he reemerges in a new form or vanishes from the trading floor entirely, his impact endures in every analyst who dares to doubt the consensus. In many ways, Burry's story has come full circle. The man who once defied the system now chooses to detach from it, closing a chapter that began with defiance and ends with quiet conviction. His words, "On to much better things," suggest not defeat, but renewal, perhaps a shift towards something more meaningful than money. As markets surge toward record highs and investors chase the next big tech wave, Burry's exit serves as both a warning and a reflection. Sometimes the smartest move in a world of noise is to step back and let time once again prove you right.